Hello and good morning everybody. Welcome to the Gold and Silver Club end of week review, non-farm payroll special today, presented by myself, Phil Carr and Nick Kalsi of the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. There's a lot to look at today and preparation for non-farm payroll as well. The live session will cover end of week summary for gold, silver and commodity currencies. We'll be looking at the top trades of the week. We'll be covering live market commentary, technical analysis, the week ahead, so key events looking forward today as well, and of course answering any questions that you may have during this call today. So gold prices this week, there's been some dramatic moves in the gold and silver market this week. Gold has hit a 10-month low, really ahead of US non-farm payroll data, which we'll look at very shortly on the actual live charts, but this is certainly a big move. On Friday the 5th of April, spot gold is at its weakest since May last year. Okay, so the markets are very clearly awaiting the US jobs data this afternoon for clues on the health of the world's largest economy. Spot gold price right now is currently trading, we'll double check this for you because the spot price does change, at $1,551 an ounce. It's heading at the moment for its second week of decline. It actually fell to 1,539.74 just yesterday, and that was on unprecedented monetary stimulus from the Bank of Japan. That's some really important news. A lot of you who also trade the Japanese yen pairs. Bank of Japan wants to double their monetary base in 2 years to 200 trillion monetary base for 2013 and 270 trillion by the end of 2014. So some real big news came out of Japan, and we've also got hopes for another European central bank rate cut failed to stem heavy selling. So analysts will certainly be watching today's US employment data from the US for a signal on the strength of the US economy. Now, in terms of what we'll be looking at, a strong report could certainly hurt gold. So if there has been more employment over the last month's figures were strong, we could see the US dollar rally, gold and silver prices weaken further, and we are getting very near some very critical line in the sand levels for gold and silver. So you've come to this webinar at the right time. We're really at some very interesting levels on gold and silver currently. So if that does happen, if the numbers are very strong, it makes it easier for the US Federal Reserve to end their stimulus, so to end quantitative easing. So a negative report will have the inverse effect. So if less jobs have been created this month and the report is negative, you will see the US dollar will weaken, and then you could see gold and silver be supported at these 9-month lows, and we could see a big rally to the upside. So certainly we're expecting fireworks today. So last month's non-farm payroll report showed the US economy added 236,000 jobs in February, and unemployment slipped to 7.7% from 7.9%. So really ahead of the eagerly awaited report, the big question now is certainly, will we see another month of positive gains in March? And if so, how will this impact gold and silver prices today? So we'll be covering that fully on the live charts very, very shortly. Okay, so before we do that, just a little bit of background on myself and Nick at the Gold and Silver Club. I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialise in teaching people how to make money from trading the most lucrative financial markets in the world, so gold, silver, oil and forex. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. I'm responsible for the research and development of the Gold and Silver Club trademark strategies, which have a proven track record of generating returns for traders, and a regular contributor to a number of financial publications, speak at numerous trading seminars, webinars and workshops. That's a bit of background on myself. And Nick Kalsi, who's joining me on the call. Nick is a professional trader, investment analyst and speaker. He'll be helping to answer your questions today. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, he spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. So it's through his first-hand relationship with some of the world's most successful traders, he discovered the formula, mindset and tools to give any individual the definitive edge to trade in any economy, and also writes for a number of global business and financial publications, and we have both appeared frequently on financial television. In fact, this is us just in March on Dukascopy, just Swiss TV, giving our views on gold and silver and some of the recent global press we've been in. So you're in good hands today. So before we go on to the live markets, we will look over the top trades of the week. And the gold price, actually some of you are just asking about the gold price at the moment. Current spot price is $1,555 an ounce and 86 cents right now, okay? Okay, so top trades of the week. So using the Gold and Silver Club signature trading strategies, we'll go through the 3 top trades of this week, all being nice meaty trades. So first of all, gold, and this was midweek on Wednesday. We finally broke that level of support at the 1,586 level. We wanted confirmation before getting into this trade. We got in at 1,583. Nice big bearish engulfing candle on the chart there, and the price has come down, hit our profit target of $1,560, which you can see previous level of support where traders have taken profit, and for a nice 230 point trade. Risk on that trade was 50 points, so $500 risk per lot, traded for 230 point reward on that, or profit for $2,300 per lot. We traded for 4-to-1 risk to reward, just shorting gold there from a break of that 1583 down to 1560. So that was a nice trade to the downside. Euro USD, in fact, we're back up to that level of, we're still at that level of resistance at the moment. We came to quite an important level of support, which gave us a nice entry at 1.2781, and you can see there on the chart where we came out at resistance, downward trending resistance at 1.2925 for a profit of 144 pips. The risk on the trade was 37 pips for each lot traded, so $370 for 144 pips profit. So each lot traded $1,440 for a 4-to-1 risk to reward on Euro US dollar. And also pound dollar gave us a really nice setup. Just yesterday we came down, we tested a key level of support again, really nice candles set up on that. We had confluence on our other indicators, and we got in at 1.5087, as you can see on the chart there, and just came out at that Fibonacci level at resistance at 1.5234, where the price is actually at this morning, which we'll have a look at, still at that level. The profit on that was 147 pips, and we risked 49 pips, so $490 per lot traded, and 147 pips was the profit on each lot traded for $1,470. So a nice 3-to-1 risk to reward on a day trade actually there on pound dollar. Moved really nicely over just the duration of one day. Okay, so those are the 3 top trades of this week. So now what we do, we're going to move on to some live market commentary. Okay, so what I'm going to do, I'm just going to load up these charts for you guys. And whilst I'm doing that, actually this won't take long at all, bear with me. Okay, so the first market we're going to move across to have a look at, we are going to move across and have a look at, bear with me, we're going to look at gold. So gold at the moment, you can see this downtrend that we've been in on gold for really the best part of about 6 months or so, certainly since the end of September last year. We are still well within that downtrend. We do have potentially more downside to go on gold. The real line in the sand sort of levels at the moment is going to be $1,522 an ounce. That's going to be a very important level to hold. That was the previous level of support which did not get broken last year. Below really between 1520 to the 1540 zone is very much a buy zone where a lot of traders are going to be looking to buy on the tips and take advantage of the pullback in price. You can see there We'll just zoom into the chart a little. Actually, let me just show you so you can see it just more visually, this whole zone of support. So this is the support zone on gold, which we tested just yesterday, and we got supported around 1540 or just below it, the 1540 level. So we only get to this level really about every 6 to 9 months. So it's been quite a long time since we last tested the 1540 level. Now, if we go and zoom in a little bit on the daily time frame, you'll see we're actually putting in, you've got a nice hammer there on the daily time frame. At the moment, we're forming an inside bar and hammer as well. So we're going to be paying a lot of attention to that hammer today, particularly, of course, on non-farm payroll, which is only a couple of hours, just over 2 hours away at the moment. So you really want to watch if we're going to get a breakout to the upside. Obviously, if we're going to break above yesterday's high, which is 1560, or whether we're going to see the price whipsaw on the announcement, or whether it's going to break down and we're going to have terrific employment numbers and the price of gold is just going to rocket down. And then we're going to be watching those key support levels around the 1520 to 1530 area. If you do get a break of 1520 and the price gets down towards the 1500s, then we could see really a lot of stop losses get hit, and you could see quite a sharp move to the downside. So we'll certainly be looking at that. So either way, we're looking for some highly volatile moves on today's non-farm payroll, given that the price is so close to support. The same situation really on silver. Silver's had a tremendous move down since in 2013 overall. It's had quite a big move down. Within this downward trending channel on silver currently. Again, we are coming towards, you can see here on the overall chart where we're coming towards a major level of support. Anytime we get really underneath $27 an ounce is a buy zone in terms of what a lot of investors would be looking at to buy on these particular dips, but you still want to make sure the price is supported. So the price at the moment, it is getting supported around the 26.75 level. You can see this whole level from 26 through to 27 is the supportive zone. So that will be a very important line in the sand again for silver. So critical areas will really be 26 to 27 for that area to hold today. And if we just go on to the daily time frame, you can see same situation really as gold. We've got a hammer at the moment forming on the daily time frame. The doji yesterday, the high of yesterday was 27.09. I would be cautious on these trades until I would certainly be cautious trading these markets until after non-farm payroll. So, but those you can certainly keep an eye on these levels. So, silver is going to be very interesting today. See whether we're going to get a whipsaw in price, whether the market is going to come down, test 26, or whether it's just going to rally straight on the off the announcement. So that will be some explosive moves, no doubt, today, and we're going to be watching that very keenly. Okay, so we're going to move across to pound dollar. Pound dollar at the moment, so it's coming up. This is the trade that we took here from nice level of support, as you can see. We've come out at this level of resistance just up here. Okay, so the price is currently testing 1.5235 Fibonacci level at the moment. So we're just seeing the price consolidating, probably again awaiting news on non-farm payroll before this market really starts to make a decision whether it's going to break out to the upside of this resistance or whether it's going to sell off and come back down towards support. So pound dollar is certainly one to be watching today. It's just been consolidating really since mid-March. You can see the market is just moving sideways, providing opportunities to go long and go short, go long and go short, as the market has just been consolidating very much sideways. Euro USD, we are back into, well, we're actually testing at the moment the upper resistance level of this downward trending channel. So it's a bit similar to pound dollar in that it's doesn't have the legs on it to break out at the moment. So it's going to be very interesting to see whether we're going to get a breakout of this downward trending channel that we've been in since the end of February on Euro USD. Again, this is going to be very much influenced by the non-farm payroll numbers, so certainly a market to be watching. US dollar, Japanese yen, this is looking very interesting at the moment. And again, just to remind you of what the announcement which came out yesterday. So the Bank of Japan wants to double their monetary base in 2 years 200 trillion monetary base for 2013 and 270 trillion by the end of 2014. So this is this is huge news for the Japanese yen currencies, and by doing that you will see these you should see these currencies really weaken, which we've seen a huge move yesterday. I mean, this is a huge candle. It's a big bullish engulfing candle, although because it moves so high and it's come up to resistance, it's a 345 pip candle thereabouts. You're seeing some profit taking. You're seeing on the daily time frame, you know, an inverse hammer, probably from some profit taking. So again, this is going to be very interesting on the jobs numbers which come out today. You can see profit taking occurring at resistance. You're seeing this really across the board for the Japanese yen pairs. You've got the same situation on the Euro Japanese yen to come up to support, resistance at 125.50. We're now starting to see some profit taking at that level, and you could see the market either come back towards support, or we just could be a pullback in price before the next leg higher. But you're certainly seeing some profit taking today, and you're seeing the same situation really across all the Japanese yen pairs at the moment. So similar situation on pound Japanese yen, where the price has come up, tested a level of resistance, and you've seen profit taking. So Japanese yen markets, they move exceptionally well on these horizontal levels. So yeah, you can see that very clearly on your chart. So those are certainly ones you want to be watching. Australian New Zealand dollar is continuing its downward trend. It's a cent down. We had a nice inverse hammer just midweek on this. Price is coming down, broken through some key moving averages, and looks to be just stepping down each day at the moment. And that's a market to keep an eye on as well, and see if it comes back towards the lower end of that particular trend channel. Those are really the main markets that we're going to be looking at. I mean, that gives you a lot. There's a lot to be looking at this afternoon. So that gives you certainly those would be the key markets to pay attention to, and those Japanese yen pairs. Again, with gold and silver, they are at major levels. If you go out to the weekly time frame, they are coming very close to major levels of support, both gold and silver. So it's going to be very interesting today on non-farm payroll as to what is actually going to happen in terms of the employment numbers and how that's going to affect the US dollar. So with that, we'll look at the news in the week ahead, and we'll look at the news which is coming out today to see how that is going to affect the markets. So I'll just bring you back to the core news to be aware of. Okay, so key events today, obviously 1:30 we've got the US non-farm payroll. So in February the labour market rallied, the number of non-farm payroll employment increased, that should be March actually, so say March increased by 236,000, and the US employment rate slipped to 7.7%. So if today's report shows another improvement, specifically a figure above 150,000 in additional jobs, this may cause further weakness for gold and silver, so which we discussed previously, whilst having a positive impact on the US dollar. The US trade balance is at 1:30 p.m. as well, so certainly we're going to have, and you've got the CAD trade balance, so we're going to see fireworks at 1:30 today. The trade balance measures the difference in value between imported and exported goods and services from the US, including commodities such as oil and natural gas. So according to the recent US trade balance report in January, the goods and services rose during the month to 44.4 billion. The deficit on that rose during the month to 44.4 billion. Okay. On Friday today at 1:30, again, this is London time, by the way. I know there's been a clock change just last weekend, so you may just need to account for that. The CAD trade balance will be, and that will affect all CAD pairs, will be at 1:30. In the recent report for January, exports increased by 2.1%, and the imports also rose by 1.9%. So as a result, this narrowed the deficit there from a 332 million in December to 237 million in January. A positive number indicates that more goods and services were exported than imported, and a higher than expected reading should be taken as bullish, while a lower than expected reading should be taken as bearish for CAD. So those are all of today's announcements, which are going to be coming up in the next couple of hours. Then next week, moving on to next week, we've got a lot of news next week as well. So if you've got your pen and paper handy, these are worth noting down because these are all going to affect certainly Forex, gold and silver. So next Tuesday, 9 o'clock, 2:30 in the morning, London time, the National Australia Bank, NAB, NAB will have the business confidence index rates released, the current level of business conditions in Australia that influences. So changes in business sentiment can be an early signal for future economic activities such as spending, hiring and investment. A higher than expected reading should be taken as bullish for the Australian US dollar, while a lower than expected reading should be taken as bearish for the Australian US dollar. That's important again because of the correlation you do get with Australian dollar and gold. Tuesday next week at 2:30 a.m. we have the Chinese CPI. So that is a consumer price index measuring the change in the price of goods and services from the perspective of the consumer. So that's again a key way to measure changes in purchasing trends and inflation. A higher than expected reading should be taken as bullish for the Chinese yen, while a lower than expected should be taken as bearish. And of course that's important because China is a major buyer of gold and silver, as you all know. Tuesday the 9th next week at 9:30 a.m. we also have the UK trade balance, very important for your pound trades, and if you're trading pound with any of the other currencies. This measures the difference in value between imported and exported goods and services over that reported period. So a positive number indicates that more goods and services were exported than imported. A higher than expected reading should be taken as bullish, while a lower than expected reading should be taken as bearish for the pound. So that's going to be important next Tuesday for those trading pound dollar or pound JPY or pound New Zealand dollar. Next Tuesday again we have at 7 o'clock in the morning the German CPI, and that will be, so I should say Thursday the 11th, that's going to be next Thursday 7 a.m. The German Consumer Price Index will measure the changes in price of goods and services purchased by consumers. A higher than expected reading should be taken as bullish for the euro, while a lower than expected reading should be taken as bearish for the euro. So again, important for your euro trades, and we do get correlation in gold and silver with the euro. US core retail sales will be next Friday at 1:30 p.m. That's very important, of course, for US dollar and gold and silver as well, and all other currency pairs paired against the US dollar. So the core retail sales measures the change in the total value of sales at the retail level in the US. So that excludes automobiles. It's a very important indicator of consumer spending, and it's also considered as a pace indicator for the US economy. So a higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish for the US dollar. And next Friday at 3 o'clock we have the US Michigan Consumer Sentiment. So the University of Michigan Consumer Sentiment Index rates the relative level of current and future economic conditions. So there are two versions of this data released 2 weeks apart. The preliminary data tends to have a greater impact, and this reading is compiled from a survey of around 500 consumers, and a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. So those are a lot of the key announcements that you certainly want to be aware of over coming into next week and coming into today as well with non-farm payroll. Okay, and if you would like to request further information on the gold, silver and Forex trader coaching program, you can simply go to www.thegoldandsilverclub.com/course form, or you can contact us at office@thegoldandsilverclub.com, or telephone us on 0207 193 0403 at the UK office, or 852 8191 0403 at the Asia Pacific office. And very simply, to request more information, you can just go to our website, goldandsilverclub.com, click on Learn to Trade, and you can fill out this information, this application to get additional information. And of course, make sure that you do take advantage of this and subscribe to our newsletter at www.thegoldandsilverclub.com, and you'll receive free weekly gold, silver and commodity currency news, live market analysis and prices. Okay, fantastic. Right, well guys, that is everything really covered in advance of today's non-farm payroll. So of course, good luck for everybody's trading today. A couple of comments there for those of you who came on the webinar a little bit later. You can just go to FX Street and you can view the recording, which will be up on the website shortly. So that should be hopefully in time for the non-farm payroll if you did miss the technical analysis there. Okay, guys? Okay, excellent. So as we come towards an end there, very quickly, there's a couple of questions coming through with regard to silver and regard to the US dollar. So what I will do, I will just quickly have a look at those for you as we're coming up just before 11:30, guys. So for the Australian US dollar, what we're having a look at the moment, you're seeing very much an upward trending. I'm not going to show you the chart, guys, because I presume that you've got that black cat who's asking the question. You can just bring the Australian US dollar chart in front of you at the moment. What you want to note is that the Australian US dollar is in an upward trend at the moment. We're getting lower highs as the price has been upward trending. We are being supported at the moment by a Fibonacci level, and it looks as though at the moment pullbacks are being treated as buying opportunities on the Australian US dollar. You've got a hammer forming on the daily time frame, and you've also been supported by a key moving average. So at the moment, the Australian US dollar is looking to be in a bullish mode currently. Yep, no problem at all, Black Cat. Okay, and we've got one of you asking about silver. We can't give you any advice on a trade that you're already in on silver. What I would say there in terms of that that position that you've got at the moment, cash up on silver, is that you just really want to be watching the key price level. So the key price action levels at the moment, obviously if we get a big move to the downside today, the line in the sand is going to be around the 26.15 level on silver, which hasn't been breached for over 2 years or so. In terms of what we're interested today, certainly we're interested in breaking yesterday's high to see if the price is going to break out this afternoon if the US employment numbers are negative for the US and cause a move to the upside. Right now, silver is looking a bit neutral. You've got two dojis on the daily time frame side by side. So I would be just very interested in what the news is going to do on this market before entering anything. But yeah, so I'll be looking at those key price action levels this afternoon. Okay, excellent. And we just got a question there on key levels on gold. Okay, so the key levels to, yeah, you're welcome, Richard, no problem. The key levels on gold to look at the moment, again, on the daily time frame, you've got quite a sharp sort of dragonfly doji. It's a hammer on the daily time frame, and then today we've got an inside bar, so we've got a smaller hammer forming. The volumes are really starting to slow down now in anticipation of non-farm payroll. Again, yesterday's high was $1,560 an ounce. I wouldn't really want to be in terms of key price action levels, that's going to be a key price action level, 1,560. You'd be interested to see if the price breaks above that. If we get negative news for the gold and silver, or positive news for the US dollar, to see if we break above that. If we get a breakdown in price, yesterday's low of the day, which you want to be paying attention to, was $1,540. If that breaks down, the real line in the sand for gold is around $1,522 an ounce. So you could see, certainly there's going to be some big positions which either may get triggered as buy orders by the bigger funds if the price comes down to those levels. Obviously, if we break 1522 and we come down to the 1500s, and if we break 1500 today, depending on the news, you could see a huge move to the downside. That's going to be technical damage on the chart with gold, and you'll probably see quite a big move to the downside. We may or may not come and revisit those levels, but at the moment the market is a bit neutral this morning. It's a counter trend trade. The overall market is downtrending currently. We are not quite, the price at the moment isn't right at the bottom of this channel. The bottom of the downward trending channel would take the price down to about the 1520 sort of a level. So very interested to see what's going to happen today on gold. Yeah, so we're sitting tight and we're going to be very interested. As I said, the volumes are starting to really slow down ahead of non-farm payroll today, but you know, there's probably going to be fireworks today on gold, so there could be, yeah, it's going to be very interesting, and we'll certainly be reporting on what happened on next Friday's FX Street. Okay, guys, so good luck everybody for today's non-farm payroll announcement. If you missed this, there will be a recording up on FX Street a little bit later, and we'll catch you on the next webinar next week. Okay, so we'll speak to you later. Okay, and do check out the website if you want to get some the additional newsletter there, or you want to find out more information on our trading program. Okay, thanks guys. We'll speak to you on the next one. See you later. Bye bye.